What is going on, everybody? Gold just had its worst month since 2008, and now it's suddenly ripping higher. Silver just exploded nearly 7% in a single day, a move unprecedented, something we haven't seen all month long. So, what is this? Is this the bottom, or is this one of the bigger traps of 2026? But hey, if you want to win this beautiful American Silver Eagle, make sure you hit that subscribe button, that like button. Once we hit that 100, we'll do a 100 video giveaway. You have to comment, we'll pick someone, and I'll ship it out to you ASAP. So guys, thank you for tuning back in. Like I said, gold had its worst month since 2008. As we can see here, we dipped all the way down to about 4,100 right here, finishing off the month around 4,700. That's a $700 swing within, let me see, that was on the 23rd, within 7 days. That was a $700 swing. And then from here, we had almost $1,000 swing within about 5 days, and 2 of these days were the weekend, so it doesn't even count. Within 3 to 4 days, we had $1,000 swing to the downside on gold, making it the worst month since 2008, and we all know what that year is known for. So hopefully that's not a foreshadow as to what's to come, but that is what happened. Right now silver is ripping 7%, right now 7.2%, 1.2% higher. We're sitting at 75. Let's see if we can end the month. We have our inverted head and shoulders pattern playing out nicely, just as we all expected. We do have 2 crucial points coming up, one on Wednesday around that night trading session around Wednesday 9 p.m. and the other going to take place around next Monday, April 6th. These 2 points right here, I believe, are going to determine whether we continue on this bullish path or if we kind of start going down. If this was just a fake out, with that final one being, close to Wednesday, April 8th. These are going to be some big key moments. Right now, the overall market is swinging back to the upside. S&P 500 up nearly 2.5% today. Probably going to end it around 3% if I had to take a wild guess. Those bulls are just taking over the market right now. But like I said, guys, silver is up 6 to 7%. There's a massive contradiction in the market today. Oil with peace talks went down a little bit. But hey, nothing about this market makes sense right now, and that's exactly why this move matters. So I want to destroy the narrative that whenever war breaks out, gold just automatically goes up. That's not going to be true. The oil spike really did have that inflation. It made a lot of people fear that we're just going to go into this hyperinflation. We all know inflation means higher rates, and higher rates puts a lot of pressure on gold and silver, but mainly gold. And silver does react, albeit a little bit later, but silver does react to the gold market. So gold didn't fall because demand disappeared. It fell because the cost of holding it went up. Gold is not, it doesn't have dividends, right? It doesn't necessarily give you anything for holding it, whereas the S&P 500 has dividends. A lot of these tech stocks have dividends, and so sometimes people will flow into those just because of that nature right there. Why I do believe some of this, we are seeing an overall general market uptrend for the day, with gold being around 3%, silver around 7%, and like I said, the S&P 500 is close to 2.5–3% on the day, which is a huge move to the upside. There have been a lot of de-escalation headlines revolving around today, so that's going to be, some relief. The short covering, shorts are covering. There was a lot of downside movement, and now that we have these big upswings, a lot of shorts are having to cover their positions, and so that is going to naturally cause more acceleration to the upside. And if we're being honest, a lot of things were oversold. All right, a lot of this market was oversold. If you look at the S&P, if you look at everything we're seeing here in silver, sitting around $70, down here on this low was around 66. We hit 69 over here. That is a very hard overselling point. Same thing here with gold, and then it was going to be the same thing with the S&P. And so I do believe that is another reason why this is just a bounce off of that. So this wasn't just buying. I do believe this was positioning, getting caught off guard. But let's get to the real story. Silver, gold's 3%, silver 6 to 7%. But silver is where the real money moves happen. We have higher volatility. It's a hybrid asset, meaning that it's industrial and monetary. So it can move based off two things, not just a singular item. And it moves harder in both directions. As we're seeing today, it's up 7%, whereas gold is only up 3%. So it's up over 2.5% or 2.5 times that gold is, and the overall market, which is going to be the S&P, only up about 2.5%. So it's almost up nearly 3 times. And so, but we have also seen on the down days, i.e. right here Thursday through that Monday trading session, where we saw a high of 74.47 and a low of 60.95. That's a $15 swing, about a $14 swing right there. So we have seen those violent trends where we go down and then we go up, from 63 to 69 in one day. Or in 4 hours, right? That was a 4-hour candle right there. And so I do believe this was a huge rejection to the downside, followed by a heavy acceleration to the upside. So I do think that this may have been a, albeit short-term bottom. Will it last? I do think that we are heading more on the upside trend, especially if we can, kind of meet right here. Let's go ahead and draw a line. I do think that this is going to be a good place to kind of judge momentarily. We will have to extend this out just a little bit more. It's about right there. We can draw all these out a little bit more. But like I was saying, I do think that this is, a nice bottom to really feed off of right here in the silver market. Let me see it coming here. There we go. And this one down here. Oh, there we go. I can't forget our zone 5. Bam, right there. So I do think this will be that head right here at the top. So as we can continue to climb up, we can expect to kind of see something along this line right here. There we go. We can kind of expect to see something like that. And so if this is the case, we're not going to see anything truly play out. So for another 2 weeks, but it's okay. We can be patient because that's the one thing we do have on our side is time, and time is money. And so I do think that if we're just a little bit more patient, I'm stacking right now some 90%, some ASEs, getting where I can low premiums. This definitely is a better buying opportunity than we did see kind of over here when we were on that negative downtrend, and then especially over here when we were around that $90 mark over here. I did caution a lot of buying inside of these areas. I wanted to see a firm rejection along this pattern right here on 93, and we did not. We actually got rejected and came all the way down to $77 before kind of hovering, and then had another drop right here. But I do think this is going to be a nice bottom. We could have easily gone down more here and a little bit more right here. But we didn't. We're continuing this path up. Now, again, there is a lot of political geopolitics going on that kind of has, I would say, emphasized this move a little bit more than usual. But, this is kind of where we're at right now. Right now, the market, I think, is stuck between two fears, which is causing some of this, is that inflation is staying high and the economy is breaking. Inflation's going crazy. Rates don't know what they're going to do. We are kind of down. If you look at the overall markets for the month on the S&P, let me see. I can come over here. I think I can go right here. If you look at the overall S&P, there we go. Boom. if we come over here to the beautiful S&P 500, we go on days, you can see how much we are down throughout the year so far. Starting the year on January 2nd, we had an open of 68.78, and we're currently trading at 65.15. That's over 300 points that we are down. Now, we are seeing a beautiful green day today, but we did have a gap right here in the market. And so I do think that this could be partially a gap covering that we're seeing right here as well. Just a technical term for markets. Any gap gets covered on the up and downside, and so that could be what we're seeing right here. We also did have more of a triple top up here, head and shoulder pattern. If you can see it play out. All right, if it starts around here, this was shoulder one. This was the head right here being the high that we saw right here, which was 7,002, and then we had another top right here, just a little bit higher, but not high enough to overcome this first top right here, and then we just started that sharp acceleration to the downside, kind of what we saw right here in this moment. So if we combine these two, and so right now this is key because this is right here. If we can get past that 65.23, we're either going to see a nice rejection of that, or if we accelerate past it, I do believe we can get back into the 6700s pretty quickly. But that's for the S&P. That's going to be what I'm talking about when I'm saying the economy is breaking. And gold reacts completely differently depending on which one wins. But we do have a couple scenarios here. I think the bull case that we're sitting in right now is that central banks are still buying. So there's still a lot of buying pressure coming from banks, which hold heavy in these types of markets. Because as long as they're buying, why would they buy a depreciating asset if they don't think it's going to continue to go up? They wouldn't continue buying. And so that is a nice bullish sign right there. Gold is already showing strong dip buyers. So as we go back to the gold market right here. Stay with me for a second. So as we kind of retreat back here to the gold, we had a huge dip right here. Couple 1, 2, 3, 4, legs down right here. The dip was bought up pretty quickly. Right here, we're almost back to that $5,000 mark, being that we almost got to 4,000 on the month, which was a huge low for us. But the dip buyers are in, and silver is back near top of range. So as we come back over here to the silver market, we have to kind of zoom out to see this one a little bit. But this is where we are right here. And so, we are in a very crucial zone right here, but we are trending back up to the top side of that, which is very bullish news right there. But at the same time, this could always just be another dead cat bounce. We could get rejected off this 75.87 mark, or this $78 mark right here, and continue our drop all the way down to 57. So this could be a relief before heading further down. That is always a possibility, but so we have to keep an eye on that. Rate cuts are still very uncertain, so we aren't expected to have any rate cuts until later in the year, and we might have one, and then we might have one in 2027. So over the next year and a half, year and 3/4 actually, we're only looking at maybe 2 rate cuts, and so that is not very bullish news for silver or gold, either one, whichever one you want to look at. Rate cuts are not our friend. Rate cuts are our friend. Whenever we don't cut rates, that's not our friend. So in this market, it's a little tricky because we want to have rate cuts so that way our silver and gold and precious metals can continue going up. But when you look at the overall economy, you don't really want rate cuts because that just drives inflation up. And so commodities are an anti-inflation type of asset to hold. And so it's like if inflation goes up, rates are going down, it's bad for the U.S. economy, it's bad for the U.S. dollar, but it's good for the value of your precious metals. Or on the flip side, if rates continue to go down, then it's better for the economy. It does hold our dollar a lot stronger, but commodities will go down as a result of that. So, we have to keep an eye out on that. This is either the start of a next leg higher or the cleanest bull trap we've seen all year. So, it could be either one of those. We just have to make sure that we're keeping an eye out on the market. Some key levels is gold needs to hold 4,600 and silver needs to hold $75. It's a huge pressure zone. Like I was just saying, we need to break out of this and continue into the 80s to really have a clean breakout. But if these levels hold, momentum builds. If they fail, this entire move gets erased pretty fast. So today did look bullish, so we're happy about that, but the next few days matter way more than today. So that's all I got for you guys today. I hope everybody has a phenomenal Tuesday. As always, stack safe, stay smart, and I'll see you tomorrow.